Happy Monday, everybody. I hope you had a great weekend. Last week was another big week, lots to talk about. And this week, we'll talk about in a moment. But this coming week, jobs week, as I've spoken about a lot, the Fed has made it clear that they are focused on this. For me, we're watching the growth data, and that's the key. But the Fed seems to have the growth data in the labor. In addition to that, I'll add that there are a lot of eco data points to watch, and there are a lot of competing data points that are coming along. So today is September 30th, 2024, and this is your last day of Q3 Monday Market Update. Let's get into it, but let's review a few things. Inflation watch, jobs watch, don't fight the Fed, growth, earnings, geopolitics, yen, dollar, gold, just a few things to keep in mind as we get going. Here we go. Recap last week, and then we'll preview this week that we're in today. Monday started quietly as the market was still in digestion mode. The Fed's 50 basis points move. There was a lot of talk about 25 or 50, and the 50 was being called the urgent number. But after all was said and done, markets liked it. For Monday, Intel was back in the news. It seemed like everyone sees a bloom on this rose, one that is down big so far this year, way down from the all-time high. But it is Intel and private equity, as well as a possible merger buyout conversation. The news lifted the mega cap stocks by the end of the week. By the way, Intel was on the back burner for that one. Eco data was better than feared, and that was on the positive side of markets. And the Euro eco data was not as good. Fed heads were at it, hawkish, trying to temper that aggressive action characteristics, trying to test the waters, maybe 25s from here, not more 50s. By the end of the day, all three indices were up about the same, muted, but less than 0.25%. Tuesday followed news of stimulus from the Chinese central bank. And while a bunch of actions, Chinese stocks were up 4%. And that was a big move. And that lit the spark here in the U.S. too. Mega cap techs moved up again. U.S. consumer confidence came in lower than expected and the lowest in a few years. What does that mean to all that we've been watching? Growth, inflation, jobs. Not sure. Let's keep watching. Definitely worries about the overall economic outlook. Fed head Bowman mentioned that inflation was still well above target. Tech stocks back on the move, Nvidia and the rest. In other news, Justice is at it again, this time with Visa, anti-competitive. We'll see what happens with that. Markets ignored that to a large degree. By the end of the day, all the news did not keep things down. The Dow was up about 0.25%, S&P up 0.25% also, and the NASDAQ was up about 0.5%. On Wednesday, markets opened modestly higher, hitting fresh intraday records before pulling back due to some profit taking later in the day. There was a little major economic data, with the main news being the Organization for Economic Cooperation and Development, the OECD. They downgraded, they had downward revisions of the U.S. and European growth forecast for 2025. They did hold Chinese outlook steady. Another report that's been pulled off the desk and reported to, been around, just no one was watching. So if you gave reports on the economy and no one reported them, did they actually happen? Bit of philosophy for today. Despite these revisions, the overall market reaction was muted, and the day's movements were largely driven by profit taking, more eco data and Fed heads to come. So just a bit of a wait and see. By the end of the day, the Dow was down about 0.75%, S&P down about 0.25%, and the NASDAQ was up just slightly. Stocks surged early on Thursday, driven by strong tech earnings from Micron, positive Chinese stimulus news, and favorable U.S. economic data. However, midday pullback occurred after the U.S. Justice Department opened a probe into AI-related company SMCI, leading to a sharp drop in the tech sector before a recovery later in the day. Again, Justice is on the move, this time on the darling AI. So we'll see if the fear of the DOJ can slow the growth. Not much else is slowing the growth. So again, markets seem to be hanging on to the Fed head's words a lot last week, and wait until you hear the list for this week. PCE was the big inflation number on Friday, and if anyone is still watching inflation except for Bowman, we'll see if that moves markets. Recall that I believe that the key is growth, and that will come in some of the labor numbers this week, but a lot of other data too. After the news from the DOJ was digested, markets got their footing. They closed higher. The Dow was up 0.75%, S&P up just about 0.5%, and the NASDAQ was up about 0.75%. Stocks opened a bit higher on Friday. PCE was below estimates. Does that mean we can stop talking about inflation? Doubt it, but consumer sentiment was also better than expected. Large cap tech had some headwinds as the Chinese actually discouraged the use of Nvidia chips. Surprise. At the end of the day, new highs for the Dow up 0.33%. A win is a win. S&P was down under 0.25%, and the NASDAQ was down about 1/3%. For the week, the Dow was up about 2/3%. S&P also 2/3%. The NASDAQ was up about 1%. We'll have to see how the month ends. Today is that day. So let's focus on a busy and important week ahead. Many are saying we should hold on and strap in. This week, we'll see the jobs report on Friday. We'll get the smaller ones all week, JOLTS tomorrow, ADP Wednesday, jobless claims on Thursday, add in continuing claims on Thursday as well. That's one to watch closely. Then, of course, we get the non-farm payrolls with the unemployment rate on Friday. Again, I suggest that all of the volatility will be gone by then, but we'll have to see. Don't set a seat at the dinner table if you're married to a Fed head. We'll hear from a bunch of them this week. Bowman and Powell today. Before the week is out, we'll add Bostic, Barkin, Collins, Hammock, Musalem, Kashkari, and Williams. Sprinkle in a vice presidential debate, possible port strike starting tonight, manufacturing services, eco data, few earnings, and the end of the quarter today. We have a making of an exciting week. So as we come to the end of the quarter today, data shows that only 9 times have we seen 8 of the first 9 months come out positive. Each of those times, markets had a winning Q4. On average, in those years, S&P was up 6.7%. It does not mean that there were no pullbacks in that time, just beginning and ending stats. As we move into Q4, this is the time for eco data to back up the expectations of a soft landing, since markets are certainly pricing that in. October has a bad reputation, and it's a busy time and usually volatile, so hold on. As always, this is all for the short term. I'm still constructive on the long term. And as I have told another set of clients this week, if your time horizon does not require a near-term event, goals change allocations, not markets. Markets rarely change allocations, at least not in the sell everything allocation. This next month or so will be packed. There is an election coming. So please stay focused. You're on your goals. Let's be sure you have the long term in mind as we make those allocation decisions we need to make. For now, stay nimble and have a great week.